This month, in preparation for the impending GST implementation, we invited guest speakers from one of the country's leading tax consultancies to share their knowledge and in-depth experience heading into the GST era. Before we begin, allow me to introduce our speakers today. Mr. Jeff O'Connell is currently the Executive Director, Tax and GST of BDO Malaysia. Prior to joining BDO, Jeff had more than 30 years of indirect tax experience across the Australian Taxation Office, professional services, as well as being an in-house advisor in Australia and Papua New Guinea. In addition to his vast involvement in indirect taxation, Jeff's GST implementation experience is equally significant across several different industries. Our second guest is Mr. Mok Chiu, and other corporate finance assignments locally and overseas in a variety of portfolios. He has also been involved in governance advisory engagements and in various insolvency administrations. He is now involved in GST, and his engagements cover various industries including power, water, construction, IT services, shipping, and trading. Unfortunately, Mr. Mok will not be able to speak to us today as he is feeling slightly under the weather. He apologized for that. Nevertheless, he is here today at StarLIVE and will welcome any questions after the session. Towards the end of the sharing, there will also be a Q&A opportunity with the audience. Without further ado, I would like to hand over the floor to Mr. Jeff O'Connell to share his insights on GST.
Thank you very much. Good morning, everybody. Can everybody hear me? Can everybody understand me? That may become a little bit more difficult as we go on. I apologise for my Australian accent. It still hasn't been Malaysianised after 9 months here, so I'm still struggling with some things. But this morning we're going to give you a very brief introduction to GST, and I'll relate some of my experiences in Australia and compare them with something that's happening here in Malaysia. One thing I can say is the models are similar, but they're not the same. Now, before we get started, could I just ask, in the audience here, have we got people who are in business, or have we got people who are just consumers who want to find out what's going on with GST? So anybody in business? A few. Oh, hello. About a half then. Righto. Okay, so this talk is flavoured a bit towards the end consumer, all right? But we'll go through those things as well as how business is affected by GST. Okay. Now this is basically what we're going to go through. I hope to be finished in about 40 or 45 minutes so we can have 15 or 20 minutes for questions. And we'd appreciate those questions at the end there, because that tells us that you're picked up things you are interested and you need, an answer, if possible, to a particular question. Okay, so what we're going to do is what is GST, some latest developments, some basics, benefits and safeguards, well, that's always a nice one. Preparation for GST, and that'll probably be very interesting for those people who are in business. What should I be doing now, or what should I have already done? I'll give you a bit of an idea of Australia and what happened there in respect of pricing and also policing. I had 17 years with the Australian Taxation Office, and I was an investigation officer before I left for private sector. So I do know what happens from the revenue side. And certainly when I was in Australia after GST came in, we had a number of audits from the Australian Taxation Office. All right, so I can give you a few ideas there, and if you've got questions on those types of things, happy to answer those. Okay, now what is GST? GST in its simplest form is a very easy tax, and if you want to look to a country such as New Zealand, who basically taxes everything, it's very easy to work out. Okay, I pay on what I buy, I charge on what I sell. The difference between those two is what I send to the revenue authorities. Okay, so very easy. Unfortunately, generally that doesn't happen. Okay, a lot of countries do not want to, for one reason or another, tax everything. So they put special rules in. So it's a broad-based consumption tax on goods and services. We had a sales tax in Australia which taxed goods. We didn't have a services tax like you guys do here. All right? And it is much broader in its scope and taxing abilities than the sales tax or the services tax combined. All right? If they don't want to tax it, that's the only reason it will not be taxed under a goods and services tax. Now, the premise behind a GST or a VAT is that business should not suffer an irrecoverable GST. Sales and services tax are an irrecoverable tax which business has to bear. GST should not be a tax on business. Unfortunately, the way it is designed, the people who most bear the burden of GST is you and I as individual consumers. The individual consumer pays GST and cannot get the GST back. So it is a cost to the person in the street, okay? Shouldn't be to business. Financial institutions are typically, all over the world, treated as an exempt supplier, which means they pay GST on their inputs, they cannot get it back. So the cost of their services will increase, or should increase. Okay? Suppliers of residential properties, again, suppliers of residential properties will be in the position of, on the input side, they get charged GST. They cannot charge GST when they provide that residential property to anybody. Therefore, their inputs will cost more. Okay? And certain overseas recipients, which realistically I don't think we need to have to worry about. Now, as I said before, GST is intended to cover everything possible. That is the benefit of the tax, the advantage of the tax. It can capture everything that you want to. And the business sector gets their money back by claiming input tax credits. What I pay tax on my inputs, what I buy, my purchases, I claim it back. All right, so it should never stick to a business, except for certain financial services and residential properties. Okay, now this is just a bit of an idea with sales and services tax and a number of rates. And there are various thresholds for registration for the particular taxes. It is a single stage tax. It hits at one point. Sales tax, as I understand here, hits at the manufacturing level and the services tax at the retail level. In Australia, the sales tax hit at the wholesale level. So it only at one point in the distribution chain. GST is a bit different. It hits at every stage, all right? So that from manufacturer to wholesaler to retailer, GST is imposed. The various businesses in that chain claim back the GST on their inputs. Then they charge when they sell to you and I, the end consumer. And we've got a couple of slides that will explain this a bit further. GST should not cascade GST on GST on GST. That should never happen, all right? It can happen with sales and services tax. Now, the rate of 6%, we'll go through a slide of some rates around the Southeast Asian area. The rate in Australia is 10%. Okay? It has been 10% since the 1st of July 2000. Has not changed, probably will not change for a while, because the way the GST works in Australia, that it requires the agreement of all the states and the Commonwealth to change the rate. So it's a very difficult rate to change unless everybody wants some more money, which governments occasionally do. Okay, the threshold for registration, so for those of you in business, if your turnover of taxable supplies, so subject to GST at 6 or 0, exceeds 500,000 ringgit, you are required to register. No ifs, no buts, no voluntary, you are required. Okay, you fail to register, we'll got some a slide on some encouragements that the government will provide in that respect, okay? So if you're over that threshold, you must register. The threshold in Australia on the 1st of July 2000 for registration was approximately 150,000 ringgit. All right, so a lot more people in the GST net in Australia. 500,000 here. Okay, some latest developments. Now, Malaysia has had a bit of a history of we're going to impose GST and then we don't. Now, if you think you are special, unfortunately you're not. Australia thought of this in 1985. They then tried again in 1991, 1992, and it was finally announced in 1998 for introduction on the 1st of July 2000. So it sometimes takes many years for governments to move in this direction. So the legislation has passed. The date is set in regulations as at the 1st of April 2015. The rate is set in regulations at 6%. All these are in the regulations. The second point there, taxed on goods sold in Malaysia, services provided in Malaysia, goods and services imported into Malaysia. Okay, it is to tax domestic consumption of goods and services. Everything that happens within Malaysia, if we want to tax it, we will. All right, that's the way it's supposed to work. Now, the bill has gone through the Senate. It has received assent. It's been published in the Gazette. The regulations and some of the orders have been published. Unfortunately, to date, the orders which designate those things which are zero rated and exempt have not been gazetted. And they will be announced in the next few months, as I understand it. We expected them to be out this month, but that's not the case to date. All right, and it is important from a business perspective to be able to identify what you're doing. Am I providing services which are taxable? Am I providing services which are not taxable? One thing to remember about GST is that if you are the business providing the service, you are liable for the tax. If you can't pass it on to your customer, that is your problem. Customers don't care. They want 6% of that value. All right, so it's important to know, what have I got to do? Do I have to charge 6? Can I charge 0? All right, do I have to charge at all? All these things you need to be aware of. Okay? Registration has already started. As I understand it, about 10,000 businesses have registered to date. The registrations are expected to exceed 300,000, is the government's guesstimate. I would, if you have to register, I'd be registering sooner rather than later, because later you may find that the registration portal crashes, like all computer systems generally do when they're overloaded. So get in early, take your time, get it done. All right? Because people will start to ask you soon if you're dealing with them in business, because we certainly advise our clients, ask your suppliers. Are you registered? Are you going to get registered? We want a copy of the letter you get from Customs telling us that you're registered. Okay, so all these things will start to move in the coming months. It's better to move quicker than slower. Okay, registration you can do electronically or by paper copy. I always advise my clients to fill out the paper copy first, so you've got all the information there to fill out the electronic, because the electronic apparently has a time limit on it. So if you're going through trying to answer questions and you don't necessarily know the answer, you may find that you're timed out from the registration process, and I don't know what happens after that. Okay, so be a bit prepared.